Hey, it's Kimosabe here with another video. This one based on Wyckoff and volume. Got a challenge from Camel Finance to see what the volume is saying. I've been looking at these charts for probably the past hour and a half, trying to uh, come up with a good argument either way. And I can't find an argument for heavy distribution happening. It looks like just a sideways consolidation in the middle of a markup phase for various reasons. But the volume doesn't appear to be coming much at the highs. And if it does come at the highs, equal volume ends up coming in at the lows. So you can see the all-time high volume candle. Let's see how many was on there. 32,000. I'm looking up at the volume, how much was there up here. It's at 32,000 Bitcoin was sold up there, or transferred, bought and sold. And at the low, we had 31,000.33. So that's an equal amount. So really, they're just pulling liquidity from the sides of the range where they can get liquidity. They're looking for transactions, basically. It appears to be reaccumulated at the lows, and it appears to be getting distributed at the highs. So it's just a range. So any consolidation that you have in Wyckoff terms is both accumulation and distribution at the same time. There's kind of a misnomer for accumulation or distribution. So you have to understand that somebody is distributing and somebody is accumulating, because for every buy there is a sell. And once the sellers overpower the buyers, then this accumulation at the bottoms is no longer relevant. And then you fall below the range and likely resist the range. Unless you get back up inside, then that's a swing failure pattern. But if you have too many sellers that are selling this down and they break below the range, anybody that bought in the range is going to be selling the back test. And that's what leads to markdown phase. But for right now, you appear to be having interest, buying interest coming in at the lows. And more locally, like every one of these wicks keeps coming down, keeps getting bought up, and it seems that there's a lot of limit buys, just limit orders sitting in the book waiting to be filled, and the market maker is kind of pushing price down into them. Likely the market's still over leveraged, and it still wants to push those orders out and fill their own orders. I was suggesting that it would be 50% of the weekly wick, which is still a little lower to go. But if we start making an uptrend out of here and start closing candles above 100K, then that might change things. But this is the way that I look at things. I put things in a box and just divide it in half. I set them at the daily candle closes. If you have multiple daily candle closes, that's where I put the top of the box and the bottom of the box. And then the mid-range shows you where you have weakness and where you have strength. Currently, we don't have any strength until we make it back up in the upper portion of the box. And that can be seen in our previous range, where I took the all-time high and I took the first leg down and then made that into my box. And you can see that strength returned as soon as you made it and started closing candles back in the upper portion of the box. That's where your strength is. So as soon as you can get back in the stronger portion of your consolidation, you're showing strength and a breakout is imminent. You could say the same thing happened right here. Or just put a box on it. And you could see the 50% of the box was showing support. You were in the stronger section, broke up, and then broke down. And then as soon as you made it back in the upper portion, it led to a breakout. This larger consolidation that took 6-ish months, you can see how the volume had like stopping volume at the beginning of the consolidation. You had spikes in volume, and then at the very low, the 49,000 low, you had another spike in volume that was very similar to that. So you had stopping volume sideways until you had similar volume to that before you bottomed out and started making an uptrend. And you're kind of doing the same thing here where you have some stopping volume here and you're having similar volume at the lows. So if we could start making an uptrend out of here and then get some strength, that would lead to a breakout. Speaking of that small consolidation, kind of what I was matching, how long did that end up taking? From that high to the very low was 49 days. Took 49 days. Current consolidation from the all-time high, or previous all-time high now, it was December 17th, to the current low, 48 bars. So very similar in time. And as you can see, that 48 bar consolidation and chop was kind of a reaccumulation in a markup phase. So if price starts moving up within this next week or so and starts getting into the stronger section of the box, I would look at this as just a reaccumulation or a consolidation in a markup phase, and we're going to continue marking up thereafter. We'll take it all the way from the low. You can see how much volume, this big mound of volume at the cycle low. A lot of accumulation happening there. We're not doing anything like that. Like the distribution doesn't seem to be happening on Bitcoin. It seems to always get accumulated, and then you don't have much in terms of distribution. Previous cycle, you had some spikes. That was some stopping volume, but it was all along the lows. You kept getting buying interest, but this whole range was a distribution. Big mound of volume, but nothing compared to the cycle low. That was a very big mound of volume. In 2018, there you had a nice mound of distribution up there. That makes sense. And then at the lows, you spike. Then you spiked in the high, so you had stopping volume on the low, pushed back up, stopping volume to consolidate again, and then the capitulation volume for the COVID drop. So that's kind of the way I look at volume. Like I said, we don't have similar volume to the accumulation that we had at the cycle low. So that's a good sign. However, price is 5 times higher. At least 5, 10, like 7 times higher, something like that. So it takes 7 times less volume. So you'd have to run a calculation as to how much distribution this actually is in US dollar terms. That could change things. But yeah, I just continue looking at the box for Wyckoff. So the futures, the CME futures do have evidence of distribution. I can say that. It does look like the volume comes in at the highs and it comes in as price is moving down. You're having accelerated volume as it comes down, but that's only on futures. I'm not seeing that on spot markets. But say that this does end up being a distribution. What you would have is your buying climax here. This would be your preliminary supply, or one of these two, preliminary supply, buying climax, automatic reaction. This would be an upthrust, then this would be a test. You'd likely get a test, another test, and then you'd have what is called the upthrust after distribution, where price kind of shoots up. And it seems to be very fast. And the target for that, you just basically take the range and project it from the closing price of the highs, which gets you, up at 123 to 125 area, something like that, maybe 128. And that would be like a wave 5 in Elliott wave terms. But it would be just a projection from this range, just a sideways price action, break higher, your target becomes the height of the range. And the same thing with a breakdown. If price does decide to break down, you would have a breakdown target of 80,000. And that could end up being a reaccumulation where price will break all the way down to 80,000 and pop back up. However, I think if price gets down to 80,000, I don't like it anymore. I would expect it to resist 92 and continue pushing down. So I want this to show strength. If this is going to be a reaccumulation or just a sideways consolidation before continued markup, I don't want to see weakness coming down here. If it does, then we'll trade it appropriately, but I want to see strength coming out of here, some kind of uptrend. Waiting for an uptrend on the daily here. Now we do have a swing high there at 97.5. So maybe we get a higher high, higher low on closing price, and we can start markup again. Just looking at how price is reacting with regards to the daily candle closes and the wicks. If price was to move down here, I don't think I'd like to see any daily candles closing below 92. I could see price wicking down to 87, but still closing the daily back above 92. That would look appropriate. And this could be just a big creek that we're going to jump across for a reaccumulation. However, this creek may already be done. I do have slightly lower targets. I kind of want this to be a reaccumulation range on lower time frames, and maybe pop up, grab liquidity, pop back down, grab liquidity again before moving up. So to draw this out, I was having just visually what this kind of looks like. If this maintains the downtrend, this could be just your ABC right here. Forget about the wick, and you pop up, and then you continue down and just break the low ever so slightly and then reverse. And that would complete move like that, where the price action just hunting liquidity pops up, grabs the liquidity, pops down, grabs the liquidity, and it's just hunting liquidity back and forth. I mean, that's basically what this move was. Break the low and then break the high. And now we might be coming down here to break the low again, maybe in March for the cycle low. Where I do find the volume profile very helpful is on the lower time frames. Usually on a 15-minute to 1 hour chart, you can see where the volume is and where the selling is. You have spikes of volume at significant areas before consolidation, like there and there, and then you have this rhythmic volume that comes in, and this is the market that basically doesn't necessarily need to start trending yet, so they're just day trading it. They're pushing the market back and forth. It's becoming a very day tradey type of market, which, yeah, that's fine if you can hopefully get an opportunity. But any opportunity, you get an impulse up, doesn't matter. It's coming back down to either touch the lows or break the lows, stop you out basically. And it'll repeatedly do that. So any impulse for the past week week and a half now, week and a half, anything that moved up immediately retraced it all. So you keep tagging these lows, but not making significant progress lower. So we're just hitting limit orders all the way down. So somebody wants to buy that, but they don't want to chase price. So price could come down a little further, maybe back down to 92. I think 93.7 was 50% of that weekly wick. And you notice how the volume is getting bigger and bigger on these spikes, lower and lower. Price is likely diverging as well, but it just seems like every low that gets hit is getting bought up. It's getting met with limit orders, which does look like a reaccumulation in this area where you have a big liquidation event and then price automatically reacts to that. And now we're entering a reaccumulation potentially, as long as the buyers, stay under price and keep buying up every time it dips down. I personally think they're just trying to shake out the leverage, um, but they're taking advantage of not putting in any sort of uptrend. So on a 4 hour, if you get a 4 hour close, above 98, that might look good for a higher low to come in, but I don't like the double bottoms. Double bottoms the target for liquidity, so I could see this thing popping up, coming right back down and taking out those lows again. If you look at these lows last week, so you had Tuesday's low, and then you had Wednesday made the same low. It came and took it out, and then impulsed very sharply out off of it. So just took liquidity, came right back down, consolidated for the weekend, and then this did give you a very small accumulation pattern with a swing failure, and it moved up. And then it gave you another swing failure to reverse back down. And then you had the 4 hour lower low close, telling you that it's probably going to start trending down. And lo and behold, it did. So now we wait for an uptrend to start. You could put a stop loss under these lows. If you take out that low, you're likely taking all the lows out. But I'm not very, very interested in it. If this thing starts to show strength and continued strength above 100,000, I'd be more interested. But I would expect these two lows to be taken out eventually. And that's kind of how the reaccumulation happens, is they give you a place to put your stop loss and then eventually push price into it, take out your stop loss. That's how their orders are filled, and then they go up for upper liquidity. So that might be the play. We may have a sharpish move down on news tomorrow maybe, and then it pops back up, or we'll have a sharp move up on news and then just sell down for the rest of the day. So watch your invalidations, don't get trapped, take something off the table if you're in profits, because this market's just chopping back and forth until you start closing daily candles higher high and get in the upper portion of the consolidation and start showing strength. So that's my thoughts. Kind of a long video giving you my thoughts. Hopefully it was helpful. And keep your stops tight and have a good night.